Chris Vermeulen from the Technical Traders.com joins us once again as we talk about meme themes and $30 silver. This and more on this week's episode of Metal Money. I'm your host, Patrick Vieira. Chris Vermeulen, welcome back to Metal Money. How are you doing?
I'm great. Thanks for having me back.
Glad you had time to be back with us again. And I want to go back to what we saw happen with the Wall Street bets and GameStop and silver. These were branded as so-called meme stocks. And from a technical trader's perspective, do you see meme stocks as something that is here to stay? And if so, do meme stocks affect, if at all, the way a technical trader or technical analysis such as yourself would interpret charts to take a position?
For sure. So yeah, there's real mixed signals on how you'd look at that. From the standpoint that I'm at as a technical trader, I don't think really the meme stocks and things getting pumped up like that and everyone piles in. To me, those are very dangerous. Most people lose money on that stuff. It's just the way when something goes straight up and gaps higher, most people are getting filled near the high and then the news and hype fades and then it falls back down. We saw that with GameStop, AMC, silver miners. I mean, that's what happens when something hits mainstream media and everyone just piles in, like the herd mentality. But so from a technical standpoint, they're very random. You don't know what the next one's going to be, what the next one's going to be listed on the site and everybody piles into. So it's kind of a wild card now. In terms of managing risk, it's a very risky type of position to get into because it's moving 20, 50% a day. And a lot of the moves happen during outside regular trading hours. So most people can't get in or get out when it's going against them or even in their favor. They can't do any action till later. So it's definitely something I steer clear of. It's not something I want to get involved in because it's just too much risk. I think that a lot of people actually got really hurt with all those moves just because they moved straight up overnight. And then from there, they pretty much collapse and fall. And so most people got burned. And I think as more and more people actually take losses from these type of moves, I think the hype and the excitement will fade off, being like, those are pretty darn hard to trade. You got to be like the first one to buy. I mean, it's just, so I think it's going to lose some strength over time. There's going to be some hot pockets, some that probably do really well. How many are we going to get? One a month or two a month or every quarter? I mean, I don't know where it's going to go, but I do think the majority of people are struggling to make money on this stuff. So I think they're going to lose interest in it over time.
Yeah, meme stocks, they're pretty incredible, being that normally you would be advised not to invest on emotion, but with meme stocks, it seems that it's all about emotion. Continuing with the meme theme, Chris, how do you view the spike in silver prices to over $30 on the 1st of February? Is it an anomaly that you discount from your technical analysis?
Right. So I saw the big pop in silver, kind of the same play that we saw in GME and AMC, where everyone piles in and creates a giant gap up. And then from there, it usually reverses and collapses again. Now, silver is a bit different of a beast because, when you look at GME and AMC, those are stocks. Almost everyone can trade a stock. So you can definitely get a huge push in that direction and drive the share prices up, where silver is more of a futures, a physical commodity play. Most people don't have futures accounts. And then of course the silver futures, there's only a few delivery contract dates that are for delivery through the year. So I think a lot of people are buying silver, they're accumulating silver. And I think we might see that big silver squeeze actually a little bit more delayed when there's the physical delivery required and how many contracts are going to expire for delivery. That's when we might see silver really have that big squeeze. So there's a big delay there. So I think it's going to be interesting to see how silver goes. I think there's a lot of upside potential. I mean, we've seen record flows of people buying silver and piling into silver ETFs and things like that, silver miners. So I'm interested to see where it's going to be on the next, futures silver delivery date and see how many contracts need to be delivered. That's probably going to be a record amount. And that's when we might start to see a bigger spread between, spot price and buying physical. Like, I mean, it's already a big spread right now, but it could like dwarf what we're at. So it's going to be very interesting.
Okay, since we're touching on contracts, it's been highlighted in news recently that the SLV may not be entirely backed by silver. If this was true, does it matter to you, and would you be confident to recommend your clients to buy the SLV for that silver price exposure?
Right. So still SLVs, I've traded it a lot. It's great, I think, for trading. But I think when things get a little shaky and where we're at kind of now, I mean, the amount of inflows, the amount of silver ETF flow that went in and the amount of contracts and ounces they need to buy to back the amount of money that moved into the ETF in the last month is ridiculously high. I don't think there's any way they can actually get all that silver, or at least not for a long time. So, do they have it? I'm pretty sure everyone can agree that they probably don't have it yet. Do they have it on paper? Yeah, they've probably bought futures contracts and they've got, delivery scheduled and all those things. But at this point, they don't actually have the physical. And I know how the financial markets work. If you don't have the physical, the markets and ETFs can implode, and everyone who's invested in them loses all their money. It's happened before. So, as a long-term investor, buying and holding SLV isn't really the play. I mean, you need to go with something more like a Sprott Silver ETF that actually has physical delivery. They've got it stored away. It's all vetted. It's not like SLV where it's just so big they can't really get what they need, even though there's the demand for it.
And we continue to see higher highs and lows since the end of November 2020. And we also saw a golden cross between the 50 and the 100-day moving average. How confident are you that we'll see silver finally cross that $30 price point in the coming weeks?
I think it might still be a little bit of a struggle for silver to get above there. Silver, it's got mixed signals. So as a long-term investor, it looks very strong. It looks like it's going to go to 38, and then it's going to go to like 45, and then I've got upside targets all around, all up until the like $88 level. So from a long-term standpoint, it looks really good. The short-term standpoint, we had that big pop in February above 30 intraday, and then it crashed back down, and it's forming a bear flag right now, which means over the next probably 2 or 3 weeks, we could see silver drop down to roughly $24 an ounce. And that would actually still be very bullish. It's just what the charts are showing based on the momentum, the money flow, and that would be a support level. And so I think that over this $30 mark, I think that's probably still several months out. So I think there's going to be more weakness, more sideways movement in silver, but I do think long term it's going to blast past there and continue to go higher. So I'm a big fan of silver. Holding physical is really the key part, I think. I think there's going to be a huge opportunity just between just the spread markup that's starting in silver. I think it could get much bigger. I mean, I think in the States we're seeing $7.50 above spot, which is a pretty darn big spread. I think it could get way bigger. I mean, there's a lot of money to be made with the rising price, but then just think when there's no supply and that spread gets even bigger when it's $25 an ounce or something crazy, right? There's going to be some very interesting times ahead. So I like it.
Silver is doing well, but gold has broke the 200 moving average recently, and this has led the gold to silver ratio reaching 65, the lowest since 2014. Has the phase where the ratio moves towards 40 or lower begun?
I mean, both charts are very similar when you look at gold and silver. I think they both are going to break out and rally at the same time. When you look at the ratio, um, when silver rallies from a percentage standpoint, it's going to rally a lot more. And we're going to see that ratio change very quickly. So I think they're both going to move roughly the same time. Silver always moves at a higher percentage. So I think you need to own both. I don't look at the ratio too much. I look at the price charts because those ratios can be delayed for months and quarters and sometimes even, years at times. So as much as, the ratio can show a really good buy signal for silver, which it did, several months ago, is screaming last year. it's a very delayed kind of indicator. And once it's started to move, that means silver's already started a new run higher. It's outperforming gold. Whereas if you look at the price charts like I do, you see silver breaking out and you can take advantage of it earlier versus waiting for the ratio to change. And then you realize you've missed a huge leg of the move up. So I like to follow price versus the ratio so much going forward.
Okay, Chris Vermeulen from the technicaltraders.com. We thank you for the time you've given us, and we wish you a great week ahead.
Hey, thanks, Patrick. Have a great week too. Take care.
There you go, a trader's look at meme stocks and silver. As always, let us know what you think in the comments section below, and remember to keep it liquid, keep it real, and I'll see you on the next episode of Metal Money.